In this video, I'll be talking about how to trade false breakouts. First, I will have to define what an actual breakout is. Now, a breakout's it's relatively straightforward. It's simply a pattern of trading, and it could be, say, a rectangle or a triangle or a bullish flag. It really doesn't matter. It all kind of comes down to the same thing. And what it comes down to is support and resistance. Now, we all know that support and resistance can come in different shapes and sizes, but there is a top and a bottom. And eventually, you break out of this area, you go above the top or below the bottom. In this case, it would be a breakout of a rectangle. You have horizontal support and resistance. So what's a false breakout? A false breakout is something that would look more like, for example, this channel, go back and forth, and you would break out of the channel and then re-enter the channel. These are very frustrating for traders. You can fall victim to a false breakout at any time because, quite frankly, there are a million things that can happen on any trade. We all know that. So with that being the case, when we look at the chart and we see a false breakout, there are a lot of things that you can learn from that. And these are important things. So, for example, here is a nice breakout. You can see that we had been consolidating, and this is the weekly chart, so this is quite some time. And we eventually broke down. This is what breakout trading should look like. Unfortunately, it doesn't always. Here is an example of a bit of a false breakout. And in this scenario, we had been going back and forth for quite some time. It's a 4-hour chart. In fact, it's actually the same chart. It's a trend within a trend, if you will. And you can see that we broke out of this pattern. And typically, it's a 1-to-1 ratio. So if let's just say this is 100 pips, then typically you're looking for a move of 100 pips. But notice how we dropped right back into this consolidation. That's normally a sign of trouble. We did try to rally again, we failed, and then eventually broke down. Well, that's, by its very definition, a false breakout. So this was your area here, and notice the longer term trend is down. So that's one way you avoid a false breakout. You trade with the longer term move. So what else can we glean from this type of information? When we get these breakouts that are false breakouts like this one, well, think about it this way. If there has been some trading here and eventually the market breaks out and then it breaks back into this area, this tells you that the buyers aren't quite as resilient as they need to be to push the market higher. Well, markets can only go in two directions over the longer term. So what this tells you is there's a high probability of selling pressure. And then when you come back into the area, kind of bounce around a little bit, you did rally right back out of it, but then you fell back into it again. So this is almost like a double false breakout, if you will. Once you break down below the bottom of this original pattern, think about what just happened. You had traders come in, they tried to break out a couple different times and then eventually failed. That's an extraordinarily negative sign. Of course, you can flip it around in the other direction. Sometimes trading is about where the market won't go. Well, the market won't rise. It'll try, but it just can't hang on to those gains. That's important information. But again, to avoid this altogether, at least hopefully, you want to trade with a longer term trend. This was a counter trend breakout. That was part of the problem. Doesn't mean that every breakout that goes with the trend will work, but the odds are certainly in your favor at that point. So look at false breakouts, although annoying and frustrating and sometimes a little bit expensive, as clues to where the market won't go, and that gives you an idea of where it probably will.